Hey there, people. Listen to our video from a tradingplan.com, and I just wanted to update the pound US short that I had made a video about. You can find that link below in the blog post here. Um, this is a 4-hour chart of the pound US, just so we can see what we're looking at. This was the short. It was a order that I had placed in the market to sell at 52.44, and the stop was placed up at 52.90. So about a 40 pip profit, stop loss, 40 pip in risk. And then I was looking at about 5065 to take my profit at. Okay, so it was a beautiful risk reward trade setup. On this little arrow here, it shows where I got triggered into the market right through here. And as I said in the other video, that we'll see what happens when the market opens on Sunday. Now, what happened on Sunday is the market did open, and it went down to a low of 5076. Remember, my take profit was at 5065, and it just missed taking me out for the full profit. So when this happens, what are you not going to do? You're not going to let the market take too much of it back. So what I did is I moved my stop down to the high of that candle to 15062. I believe it was 10 pips above that, so 5172. That's where I moved my stop to. Okay, so that's on the this is the 4-hour chart. And then as today progressed, today's Monday. Today progressed, and I saw the market was starting to jump around here. What I did is, so the stop was originally up here. Okay, you see, and the market never really tried to break down in this area right here. So we're getting into, this is in the morning time. This is about 3 o'clock in the morning Eastern time. And I saw these wicks coming up here. So for me, this is telling me that there's a lot of what? There's a lot of bears wanting to push this price down. Well, a lot. Who knows how many there was. But just that the price candle was showing that market would rally up and get pushed down. Had this green one, and then we had this big thrusting candle down here, right? We got all this happening. So what am I looking to do? I'm thinking, okay, what I had done was I moved my profit target just above this low in case the market does come down to a retest, okay, which you kind of see does here, but not far enough down to get me out of the trade with my profit. So by watching the price action, noticing these wicks coming in at the top of this candle here, I'm thinking, okay, what do I need to happen? When I see this candle and price didn't bust down even further, what do I want to do? I want to cut risk, okay? Because when a market's going down, what do I need to see? I need lower lows, lower highs. So we've got this low here, and then look what's happening. We do make these lower highs than we see over on this side, but then we see this coming in here, and this big strong candle not pushing it down far enough. It basically stops at this price point here, right in this level right here. It stops. Let me just clean this mess up. So all I did was when I saw this green candle coming up, I said, you know what, let's not play around with this, because look, my profit is now moved up to about 50.80. I'm not exactly sure where it was, but it was around the low of this. So let's say 50.80. And how much do I want to give back? So when prices, if I've locked in this at 51.62, right? Now I'm looking for 50.80. So that's 80 extra points that I want to get. Am I going to give back an extra 80 points? Well, where's price? I'm looking at a price. So if I don't move my stop down, I'm giving back 80. Now, ultimately, we got 130 pips on this trade, okay? So giving back 80 would be stupid. It doesn't make any sense to do that. So what I did is I ratcheted down my stop to just above the green candle, which was at 51.18. And the stop loss is at 5115. So actually, moved my stop down while this candle was forming, because the way this candle had formed up earlier, it had put in a high and then was rejected. All right. So what I was thinking, you know what, I'm not breaking down through here. I don't want to give too much back, right? So what are you going to do, right? 51.15. I was looking to get down to 80, right? So that's extra 30 points I gave back. So am I going to risk all of this, all the profit? Let me just draw this. Am I going to risk, give me 1 second here. Am I going to risk all of this profit to make this much profit? The answer is no. So got out here for 129 pips, and as you see, the market just kept on going higher. All right, so that's just it's one of the systems that I'm going to highlight here later on in the blog. I'm just trying to show you that this kind of stuff it works. It's price action, and just keeping in mind, even though it's got some indicators on it, that you still watch price. Price is the ultimate. Indicators will. People say trading with indicators is bad. Well, I don't. Trading with indicators as your sole source of, taking a trade or not is not good. But when you can build in using price action is what you want to do. And as you see, this market does come back and rallies up. So I would have got stopped at anyways if I didn't, read this price, what was going on, and seeing that it's not busting lower even after we get this move here. So what do? You take your money. So, think about it, risking 40 for 129. It's over 3-1 reward to risk ratio. Position sizing at just over 2% or 1%, whatever you want to use. You can imagine that the payoff can be quite good depending on the size of your capital. All right, that's it. Let's wrap this up. Thanks for watching and for checking out my blog.